Hi all. Today we'll talk about a very special fund from Groww Asset Management. We'll talk about the Groww Gilt Fund. So what is the Gilt Fund? Who should invest in a Gilt Fund? How will the Gilt Fund operate? To answer all of these questions, I have a Senior Fund Manager, Fixed Income, Kaustubh Sule with me, and he will answer all of my questions. Hi Kaustubh, how are you?
I'm good, Imanshu. Thanks for the introduction.
Right. So Kaustubh, first question is, what are Gilt Funds? I think that is what most investors want to know.
Yeah, I think what we should focus on over here is the word gilt, which primarily means government securities. Gilt securities are basically government securities. So, by way of it, they are backed by the government of the current day, which is government of India, and there are state government securities also, which are backed by the respective states. Now,
Yeah.
what happens over here is that there is a sovereign guarantee to this government security. So, this implies that
Yeah.
there's a minimal credit risk in these securities. So, since
Yes.
the credit risk is minimal over here, what we are looking to do through this fund is capture the opportunities which are there, which due to interest rate cycle changes, and take benefit of those changes in the interest rate cycle. And that's what Gilt Fund broadly does: minimal credit risk and express your view or capture the opportunities through fluctuations in interest rate cycle.
Right, Gustav. That's well explained. So my second question is ki, how do we choose which government securities to invest in? How do we decide the duration of the investment also?
So, herein we have to see the investment framework that is over there. Since the credit risk is minimal, we don't have to spend much time on that.
Right.
So, what happens over here is that we have to first choose, as you rightly said, the duration of the fund. How do
Yes.
you choose the duration of the fund? Is having an interest rate view. So, interest rate view is formed in a three-step process wherein we take long-term, medium-term, as well as tactical considerations there, and we arrive at a target portfolio duration.
Right.
And post that, in this investment framework, what we do over here is that when interest rates are going down, yields are inching down, uh, we have possibilities of price appreciation. We try to capture that along with the income that we get, or coupon payments that we get through the government securities. That is one way of doing that. So increase the target portfolio duration at that point in time when interest rate cycle is moving downwards. And during the upward movement of interest rate cycle, you try to minimize the price risk by lowering the duration of the portfolio. And that's how broadly you create an investment framework through which you choose respective government securities.
Right. I think you've already partly answered my next question, which was essentially that what is the investment framework of the Grow Guild Fund? How is this fund structured, and what does it aim to achieve for the investors?
Yeah, so Groww Gilt Fund has minimal credit risk because of the structure that it has government securities
Of course.
and state government securities as the majority of its portfolio, 80% as per the SID.
Right.
So the investment framework relies on two aspects. So because of minimal credit risk, the question that you have to answer is the what is the target portfolio maturity or portfolio duration, which
Right.
is basically weighted average of the maturities of individual securities in the portfolio. That is the one aspect, and
Sure.
that we do through our interest rate view. We have a comprehensive interest rate view framework. The second aspect over here is that apart from the income that we get regularly through interest payments of the underlying securities, there is a price aspect to it,
Right.
wherein during the downward movement of yields, we see price appreciation, and during the upward movement of the yields, we see price risk.
Right.
So we try and actively manage the duration of the portfolio in the interest rate cycle, so that we gain from the potential capital gains during downward movement of the interest rate cycle. and minimize the price risk during the upward movement of the interest rate cycle.
Understood.
That is broadly the investment framework of Groww Gilt fund. The
Understood.
structure of the fund is that we select government securities as well as state government securities based on the yield curve, and so that in an adaptable manner we can respond to changing economic conditions.
Mm,
So basically, various government securities in an adaptable manner through various economic conditions. That's how we structure the fund. So the aim of the fund is twofold.
mm,
So as I explained, there are two parts to the returns of the fund.
yes.
Uh, One is the income part, wherein the underlying securities have interest payments or coupon payments, and that
Mm,
gives you an income potential. The
mm,
second part is the price risk part, wherein the uh, changes in interest rate cycle give you potential for capital gains and capture those
makes
capital
sense.
gains and enhance the returns of the funds. So these are the two aims of aim for the Groww Gilt fund.
So I think what I gather is that the Grow Guild Fund will invest in government securities, right? How will you choose which government securities to invest in, and how will you decide which duration to choose in terms of investing in government securities?
Right. So, choice of government securities will first rest on the target portfolio duration. So, how do you arrive at the target portfolio duration?
Right.
Through an By taking an interest rate view, we have a three-step framework. Now, the
Yes.
first aspect of that framework, or the first step in that framework, is look at the broader interest rate cycle and determine the broader interest rate cycle through
Right.
macroeconomic factors. So,
Yes.
what are those macroeconomic factors? The macroeconomic factors are growth, inflation, how is the currency doing, what are the various external factors amongst CAD, which is basically current account deficit, how are the trade flows happening, how are the long term capital flows in capital account happening.
Mm,
So all these macroeconomic factors combine to form an interest rate view, and where we are in the interest rate cycle, whether we are in that upward movement of interest rates or downward movement of interest rates.
right.
So this gives you a broad analysis as to where we are placed broadly in the interest rate cycle. The second aspect of it is that once you have determined from broad macroeconomic parameters, you arrive at a relative valuation or focus on relative valuation of securities. So, what
Mm,
do I mean by relative valuation over here? So,
right.
in gilt markets, there are or fixed income markets, there are various sub markets. You have state government securities, various maturities, right from 1 day to 50 years, and you have the whole yield curve. What is the relative valuation or the spreads of, let's say, for example, what is the spread of 10-year over 1 year? What is the
Mm,
spread of 3-year maturity security over 1 year maturity security? So that is one of the consideration for relative valuation. Second is that what is the swap curve pricing in terms of future interest rate cuts or hikes,
mm,
and depending on that valuation, how are the respective government securities of states as well as central governments placed. So that is the second aspect or relative valuation aspect of the selection. The
yes.
third aspect over here is that of tactical aspect, wherein you see government borrowing program coming in of various states and the central government, wherein there are flows or tactical flows through FIIs, tactical flows of
Mm,
various market participants like banks, insurance, even RBI buys from the market. So that covers the tactical or technical aspect of the framework. So
Right.
with this framework, a broad interest rate cycle, relative valuation between securities
Mm.
along the curve of various maturities, and third aspect is what is the tactical positioning at that particular point in time.
Mm.
We choose various government securities, be it central government or state government, and that is broadly the criteria with which we do that.
Understood. So when we talk about government securities, I think the fiscal health of any government is actually fairly important.
Correct.
And I think India's fiscal health is has been improving lately. How do you think that will play a role in the Grow Gilt Fund?
So, what happens over here is that in any yield component or any pricing component of government or fixed income securities, there is uh, there is current interest rate, which is the short term interest rate set by RBI. There
Mm.
is second part is the expected change in interest rate, that what is market expecting in future, what will be the changes in interest rate. The third component is term premium, or you may call it a risk premium also.
Mm.
What happens over here is this third component has a lot of factors which involve demand and supply of government securities and determine growth and inflation. So this third factor, medium term fiscal framework, becomes very important,
Right.
which determines the supply of government securities in the market. And we all know the basics of demand supply, that if supply exceeds demand, you see
Yes.
it within interest rates. So
Right.
what government has done is this medium term fiscal framework, that wherein in this union budget of FY26 they
Mm.
have said through FRBM Act they will come to 50% debt to GDP.
Mm.
Currently, we are
Interesting.
at roughly around 55% debt to GDP.
Okay.
So, what this will entail is that broadly your gross supply of government securities will remain stable. So, as your economy is growing, the supply remains stable. But because of the growth, you will see demand coming in over there, and it will offer stability to your interest rates and reduction in the third factor, which is the term premium,
So,
and help the yields to move in a downward.
right. So we've been seeing that inflation has been going down, especially I think core inflation has been going down. I think energy prices have also been going down. How will this play a role, and how will this influence the decision making of the Grow Guild Fund?
Yes. So, if you look at core inflation and energy prices chart, what we see over here is that there is a correlation between energy prices and core inflation, because energy prices serve as input to a lot of products, where it serves as an input cost. And if, let's say, input costs remain stable or decrease, the output costs or the prices with which consumer get the products also remain stable or decrease. So we have seen some downward movement to stable movement in energy prices,
Hmm.
and that helps core inflation to remain stable or in a downward movement.
Yes.
And what happens over here is that RBI has a target of 4% inflation on a medium term basis.
Mm.
And we have seen core inflation trend towards that, which is the less volatile component over here. So
Right.
RBI gets comfortable in reducing interest rates,
Mm.
and that helps in downward movement of yields of government securities. So net lower energy prices get connected to downward movement in yields through
Yes.
lower core inflation, stable core inflation, and more space for RBI to cut interest rates, because their primary objective or target is inflation at 4% on a medium term basis.
Makes sense. We're also seeing that a lot of FI flows have been coming into India's debt market. How will this influence the yields of government securities?
Yes. There are three components to the yield: current interest rate, what are the expected future interest rates. The third is term premium, which roughly has a demand supply dynamic to it.
Exactly.
So what happens over here is in 23 we have been included in government bond indices of various global agencies. This has resulted in flow of roughly $8 billion in 2023 and around $16 billion in 2024. So what this adds is a demand dynamic to the existing supply. And remember, if through medium term fiscal framework the supply remains roughly stable, this flow increases your demand,
Right.
and consequently, it helps in reducing the term or risk premium of the yield component and helps in downward movement of the yields.
Understood. India's current account deficit has also been improving of late. How do you think that will impact the performance of the Groww Gilt Fund?
So, current account deficit has traditionally been a pain point for India. If we look at the previous episodes of crisis of, let's say, 2008, 2013, we have traditionally seen a higher current account deficit resulting in higher currency volatility, which got transmitted to ultimately higher yields. So, herein, what we have seen over here is that current account deficit has got uh, better over the years due to two, three structural components. First is remittances, because of people of Indian origin are remitting from abroad to India, and those remittances are now reaching over $110 billion annually. Second component which has improved structurally is the services surplus. We were not that big a services export country maybe 10 years back. Now services surplus is a big component of
Yes.
it. And as technology has improved, we have become more energy efficient. Energy import bill is a big part of our imports.
Yes.
And all these components improve the current account deficit, which results in macroeconomic stability for any country, and which consequently results in lower currency volatility. So your macroeconomic factors become stable, which reduces your term premium or risk premium for any country. So, and that's how it helps grow Gilt Fund through lower risk premium or lowering of yields.
Makes sense. I think you've explained beautifully about the fund and how will the fund be managed. Which investors will this fund be most suitable for?
So, my sense over here is that every fund or every fixed income fund, every fund of an AMC has a riskometer over here. The product label or benchmark label for this risk level for this fund is moderate risk.
Right.
So it is suitable for investors with moderate risk,
Mhm.
and investors who have a time horizon of roughly 2-3 years with
Mhm.
long term goal, strategic long term goal, can look to invest in this fund. And it sits in the middle of the spectrum of the various risk labels that regulator has provided. Regulator has provided risk labels from low risk to very high risks, and it sits in the middle of the pack.
Yes.
So roughly 2 to 3 year kind of an investment. So and with strategic goal for long term investors, that's what the
Yes.
suitabilities of this fund.
Understood. Given the current market situation with the drawdowns and all, why do you think that right now is the best time to invest in the Grow Guild Fund?
So, if you look at uh, broadly, taking an interest rate view in a market, lot of factors play a role, medium term factors as well as the factors which are there in immediate term. So, in medium term, what helps government securities is a strong fiscal framework, or by this government of India, which they have said it through FRBM Act that they will
Right.
come 50% debt to GDP. That medium term framework is in favor of government securities. The immediate or intermediate factors over next 1 or 2 years is you have good real rates, which is basically purchasing power over average inflation rate. So what is a real rate is uh, RBI projects that over next year the average inflation CPI headline is around 4%, and let's say 1 year government securities trading at around 6%. So
Hmm.
the real rate is around 2%.
Right.
So that retains your purchasing power, and it gives RBI to reduce interest rates further to prop up growth in case of a slight growth slowdown. So, and we are in midst of an interest rate cutting cycle. RBI has said that they have an accommodative stance. Wherein accommodative stance mean specifically a pause or cut in interest rates.
Hmm.
So that is favoring yields which do well, or there is a potential for gains in such kind of a scenario. That is the intermediate term benefit. Second is, as current account deficit improves, your country risk premium decreases,
Yes.
your stability of currency increases, macroeconomic stability increases. And remember, less the uncertainty, less the volatility, and less the risk premium or less the interest rates you demand.
Hmm.
So, and overall, in the current scenario, what we are seeing is that energy prices as well as core inflation is under control, because what we are seeing over here is that in current geopolitical scenario, we are getting cheaper goods from China, which also is helping our inflation.
Good part.
So all these medium to long term as well as near term factors,
Hmm.
uh, a lot of these factors are in favor of government securities yields in a favorable manner. So that's why we believe that currently it's the right time to invest in gilt fund.
Right. So one last question for all the investors who are actually considering investing in the Grow Gilt fund, how do they integrate this fund into their portfolio?
Yeah, I think when you look at a fixed income portfolio per se, there are roughly 3-4 buckets which it consists of. Firstly, it consists of an immediate liquidity bucket, wherein you invest as per your immediate liquidity requirements, which can have, for example, EMIs or immediate payments, roughly from 15 days to 3 months kind of
Right.
maturity or duration.
Yes.
Second, forms an intermediate liquidity bucket, wherein you have, let's say, requirements of outgoes from 6 months to 1.5-2 year kind of category.
Hmm.
So in this category, you have money market funds, two short duration funds, and low duration fund.
Hmm.
So,
Yes.
and the third category in the fixed income portfolio is strategic opportunities or market opportunities, wherein some portion of your fixed income portfolio you would like to keep for market opportunities in the fixed income market, and that's where Guild Fund lies in that strategic opportunity bucket with an investment horizon of roughly 2 to 3 years. And the risk profile of this fund as per SEBI categorization is moderate risk. Remember this, it's in the middle of the spectrum which regulator has prescribed, which is roughly from low risk to very high risk. And that's how investors should view it from, let's say, a strategic market opportunity kind of perspective.
Makes sense. Thank you so much, Kaustubh. Thank you for this insightful session. We really now know um, what a guild fund is and how will the Grow Guild fund be managed. Who is this fund for, and why is this the right time to invest? The Grow Guild fund will be live from the 23rd of April to the 7th of May. Please consult your financial advisor before investing. Thank you so much.
Thank you.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.